gold coin.
What do you got in your hand? What's the value of that?
This is a 22-karat gold. It's 1 ounces. It's a $50 face value. We'll ask Craig Smith. He's the CEO of Swiss America. What the value of this coin would be?
Well, at today's market value, with gold at $280 an ounce approximately, it's worth about $290 an ounce. That's a gold bullion coin, which trades for the price of gold, plus a small premium for manufacturing it from a 400-ounce bar into 1-ounce increments.
Because I was always under the impression that the premium for a coin is that much more, and that's not much of a premium at all.
Yeah, it depends. On a bullion product, the premiums are extremely low. Again, they charge a small fabrication fee. In the case of numismatic coins, however, early American gold coins, the premiums are substantial over their value in gold because of their rarity, their beauty, their history. Matter of fact, you have there an 1865S $20 gold piece from the Brother Jonathan wreck. It was a ship that went down. And that coin has a value way in excess of what we just discussed.
Right, this is a $20 face value, I think, isn't it?
That's correct.
What would this be worth?
That's worth about $6,000 today.
Wow.
And you guys are a brokerage firm that you trade these coins. It's not a lot different from the way people buy and sell stocks, but it really is something you can get into as an investment.
That's correct. It actually does trade very much, Pat, like stocks. We buy and we sell. That's why we're a brokerage firm. Anybody that just strictly buys and never sells obviously can't experience the profits that you see with numismatic coins. In the case of gold bullion has done exceptionally bad over the last 20 years. Let's face facts. From March of '99 to today, it's been up less than 1%. Yet during that same time period, gold commemorative coins, if you track an 11-piece gold commemorative set, and I know you guys are going to think I'm crazy, but it's actually up 90% in that 3-year time period. So if you buy the right type of gold, you can do extremely well.
Yeah, but the difficult thing about that is how do you know what's right? Because now suddenly you're dealing with something that's a little bit fickle, which is what do people consider to be a real collector's item and what do they not latch on to?
Very, very important.
And I guess you're talking about the difference in value between these two coins. This one being linked to the price of gold. This is the one on the left of the screen, and the one on the right of the screen is the price of gold plus its rarity value.
That's correct. And of course, it's really, when you think about it, economics 101, supply and demand. When there's no supply, which is the case in the numismatic coins, and the demand keeps increasing, you see higher prices. If a huge amount of product came on the market tomorrow, we'd obviously see prices drop. And in light of what's been happening in Wall Street recently with some of the questionable accounting practices, put more money into the tangible area because they don't have to depend upon an accountant or a CFO or somebody to give them the information to know where their values are.
Are you talking about retail investors, people who are investing for themselves and want to hedge against whatever's happening?
Yes, we deal strictly with retail clients. We both buy and sell for our clients. And what we're finding out recently is that in light of what's happened in the case of gold commems, we have a huge amount of demand. And the reason for that is because people want to hold gold in their portfolio as a small hedge, maybe 5 or 10%, but they hate the lack of performance. In the case of a gold commemorative coin, you not only have that gold as a hedge, traditional hedge against inflation, but you also have a product that's actually been performing over the last 3 years, which you guys know at the Money Gang, it's all about performance. If you're not performing on Wall Street, you're dropping in value, just that simple.
Let's stick with that Wall Street comparison for a minute. How's the liquidity in these investments? Can you get rid of one when you need to?
Extremely good, and that's probably, they always talk about how coins are safe. And the reason why coins are safe is because coins, they make a market on them literally 6 days a week, 24 hours a day around the country. And you can walk into over 5,000 coin shops and coin dealers, national brokerage firms like ourselves, plunk a coin down on the table and walk out with a check. Or if you've mailed them to, say, a company like us, we'll do a bank wire. They're extremely liquid.
Except, when you come to diamonds, you'll never get the value that you paid for it. If I buy this coin, what am I paying for it? You said it's worth about $290?
$280, and or $290. That's $280 worth of gold in it. If you melt it down, it has $200.
So if I come back to you next week and say, look, I need my money back, I need to sell this.
Right. Whatever the current prevailing price on gold is, that's what we would pay for it. Now, in the case of numismatic coins, you have spreads that can vary anywhere from as little as 10% to as much as 30%, and that needs to be taken into the equation. If you buy a coin today to sell it tomorrow, it's really a bad way to go. You should be buying a coin today to hold it for 2, 3, 4, 5 years. It shouldn't be something that's short-term, and short-term, in my opinion, guys, has really been killing a lot of the markets. So, of course, we try and encourage people to look a little bit more long-term than 15 minutes.
So if you're a day trader and you're trying to stocks, don't get into coins. Craig, thanks so much for being with us. That's a book that you've written. It's a bit of a guide, is it?
Here's a gift to you.
All right, we'll take a look at this.
Rediscovering Gold in the 21st Century. You can find it at SwissAmerica.com on the net.
Craig Smith, thanks so much for joining us.
Appreciate it.
Craig Smith is the CEO of Swiss America.